Hey guys, welcome back to another episode. In this video we will be going through our best momentum trading strategy for quick profits and how we use it in combination with price action. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Momentum investing can turn into large profits for the trader who has the right personality, can handle the risks involved, and can dedicate themselves to sticking to the strategy. Implementing the best momentum trading strategy can be the ideal way to build and manage your trading account. Our team at Trader DNA believes that a momentum indicator strategy can reduce risk. It can also enhance your overall returns. We featured this strategy in our comprehensive guide for the best trading strategies we have discovered. And now, before diving into the best momentum trading strategies, let's define what momentum indicator trading strategies are. What is momentum? The term momentum was borrowed from Newton's first law of motion. The law states that where an object in motion tends to stay in motion until an external force is applied to it. This postulate is known as the law of inertia. Think of it as the momentum of a train. When a train starts up, as it accelerates, it moves very slowly. Once it gets up to speed, it stops accelerating but remains traveling at a higher velocity. At the end of the trip, the train decelerates as it slows down, but it can take many miles of track to apply the brakes on before finally coming to a complete stop. For the momentum investor, the best part of the train ride is in the middle, when the train is moving at its highest velocity. Like in the law of physics, a market in motion tends to stay in motion rather than reverse. This is the reason why a momentum indicator strategy is so powerful. So, an instrument that goes up tends to continue going up, and instruments that are going down tends to continue going down. Essentially, trends tend to continue, and we can use momentum to determine when to buy and when to sell. This is because instruments with positive momentum tend to have positive returns in the near future, and vice versa for those with negative momentum. This is why we have found that momentum is typically the best indicator for scalping, intraday, and swing trading. There are various explanations for why price momentum occurs. Each bias has its own name and psychological explanation behind it. The simplest explanation would be that rising prices attract buyers and falling prices attract sellers. Our best momentum trading strategy is based on this simple explanation. Pretty simple, right? Using a momentum indicator strategy, it means we're going to hold the trade for a short period of time. Anywhere between a few minutes and up to a few days. Basically, the best momentum trading strategy runs until the momentum dries out. So, we only want to concentrate on the relative strength of any instrument. Now, before we move forward, we must define what technical indicator we need. This will help us select the best momentum trading strategy and how to use it. There are a variety of different momentum indicators. But the best momentum indicator is by far the Williams %R indicator. This indicator will help us identify profitable day trading opportunities. The preferred settings for the Williams %R indicator is 14 periods. The Williams %R runs on a scale from -100 to 0. A reading in the vicinity of -100 is an indication that the instrument is oversold. This means it's a potential buying opportunity. Once it reaches 0, that's an indication of overbought and maybe the time to sell. Now, let's see how you can effectively trade with the Williams %R indicator. Our team at Trader DNA believes that smart trading is the way to build the best momentum trading strategy. In this regard, we don't want to predict when the momentum will happen, but we let the market tips his hands and then react. One principle of the momentum indicator strategy is buy high to go higher and sell low to go lower. In other words, we trade in the direction of the trend while having the momentum on our side. Also read the hidden secrets of moving average. And now, moving forward, we present the buy-side rules of the best momentum trading strategy. Step 1. Define the trend. The definition of an uptrend is pretty much standard. In an uptrend, we look for a series of higher highs followed by a series of higher lows. The higher high is simply a swing high point that is higher than the previous swing high, while a higher low is simply a swing low that is higher than the previous swing low. All momentum traders know that the trend is our friend. But without momentum behind the trend, we might actually not have any trend. Step 2. In an uptrend, look for bold candlesticks that close near the higher end of the candlestick. The technical analysis concept is that you want to use multiple confirmation signs when buying and selling. This will increase the likelihood that's a high probability trading setup. In this regard, the momentum trading strategy, besides using the best momentum indicator, also incorporates the price action. A practical way to read momentum from a price chart is to simply look at the candlestick length. What we want to see in an uptrend is big bold bullish candlesticks that close near the higher end of the candlestick. In this example, we have an ideal representation of what we are looking for. The upside price movement is preceded by big bullish candlesticks. This confirms the momentum behind the trend. Now, it's time to focus on the Williams %R. This is the best momentum indicator, which brings us to the next step of our momentum indicator strategy. Step 3. Wait for the Williams %R indicator to get oversold or below -70. Then rallies above the -50 level before buying. We're going to use Williams %R indicator in a smart way. In an uptrend, we buy after the indicator has reached oversold conditions or below -70 and then rallied back above the -50 level. Now, we have confirmation from both the price and the momentum indicator. The real momentum is behind this trend and the probabilities are in favor of more upside prices from here on. The next important thing we need to establish is where to place our protective stop loss. Step 4. Place your protective stop loss below the recent higher low. We want to hide our protective stop loss. It is below the most recent higher low level that formed right before the best momentum trading strategy issue the buy signal. Alternatively, you can also trail your stop loss below each most recent higher low. This strategy will allow you to lock in the potential profits in case of a sudden market reversal. Last but not least, the momentum indicator strategy also needs a place where we need to take profits, which brings us to the last step of the best momentum trading strategy. Step 5. Take profit once we break below the previous higher low. The trend in motion can stay in that state longer than anyone can anticipate. And since we want to maximize our potential profits, we let the market tips its hands before liquidating our trades. In this regard, we look for a break in the trend structure, respectively a break below the most recent higher low. Alternatively, you can take profit once the best momentum indicator breaks below the -50 level. Note: this was an example of a buy trade using the best momentum trading strategy. Use the same rules for a sell trade. Step 1. Define the trend. A downtrend is defined by a series of lower high followed by a series of lower low. The definition of a downtrend is pretty much standard. In a downtrend, we look for a series of lower highs followed by a series of lower lows. A lower high is simply a swing high point that is lower than the previous swing high, while a lower low is simply a swing low that is lower than the previous swing low. For active traders, we also look at the actual price action in order to gauge momentum, besides reading the Williams %R indicator. Step 2. In a downtrend, look for bold candlesticks that close near the lower end of the candlestick. A practical way to read momentum from a price chart is to simply look at the candlestick length. What we want to see in a downtrend is big bold bearish candlesticks that close near the lower end of the candlestick. In this example, we have an ideal representation of what we are looking for. The downside price movement is preceded by big bearish candlesticks. This confirms the momentum behind the trend. Now, it's time to focus on the Williams %R. This is the best momentum indicator. Which brings us to the next step of our momentum indicator strategy. Step 3. We're going to use Williams %R momentum indicator in a smart way. In a downtrend, we sell after the indicator has reached overbought conditions or above -30 and then rallied back below the -50 level. Now, we have confirmation from both the price and the Williams %R momentum indicator. The real momentum is behind this trend, and the probabilities are in favor of more downside prices from here on. The next important thing we need to establish is where to place our protective stop loss. Step 4. Place your protective stop loss above the recent low or high. We want to hide our protective stop loss. It is above most recent low or high level that formed right before the momentum trading strategy issue the sell signal. Alternatively, you can also trail your stop loss above each most recent low or high. This strategy will allow you to lock in the potential profits in case of a sudden market reversal. Step 5. Take profit. The trend in motion can stay in that state longer than anyone can anticipate. And since we want to maximize our potential profits, we let the market tips its hands before liquidating our trades. In this regard, we look for a break in the trend structure. Respectively, a break above the most recent low or high. Alternatively, you can take profit once the Williams %R momentum indicator breaks above the -50 level. Here are other examples of the Williams %R momentum trading strategy. Momentum investing can turn into large profits for the trader who has the right personality, can handle the risks involved, and can dedicate themselves to sticking to the strategy. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.